By 2025, Bitcoin could transform the global economy, hitting $150,000, driving institutional adoption and challenging traditional systems amidst inflation, geopolitical tensions, and regulatory shifts. The financial revolution is unfolding now. As we approach 2025, Bitcoin stands at a pivotal point in its evolution, poised to potentially reshape the global economic landscape. With its price recently surpassing $100,000, Bitcoin has cemented its position as a major player in the financial world. The future of Bitcoin is intricately tied to several key economic factors. Chief among these is the projected expansion of the global money supply. Analysts predict that by 2025, the global M2 money supply could reach $127 trillion, marking an 18% increase from current levels of $107 trillion. This substantial growth opens up the possibility for Bitcoin to capture a significant portion of this new liquidity. Jamie Coates, chief crypto analyst at Real Vision, suggests that Bitcoin could potentially attract $2 trillion of this new money supply. This prediction is based on historical trends, where Bitcoin has typically captured around 10% of newly created money. Coates states, global M2 bottomed at $94 trillion in Q4 2022 and has since climbed to $105 trillion. During this period, Bitcoin's market cap 5x'd, adding $1.5 trillion. In other words, 10% of the new money supply has leaked from the fiat system into the emerging global reserve asset of Bitcoin. If this pattern holds, it could lead to a substantial increase in Bitcoin's market capitalization and, consequently, its price. The growing monetary debasement may strengthen institutional Bitcoin adoption due to Bitcoin's over 113% annual returns, which has been outperforming traditional investment vehicles. Federal Reserve decisions will play a crucial role in shaping Bitcoin's trajectory. The potential for interest rate cuts in the coming years could have a significant impact on Bitcoin's price. According to the CME FedWatch tool, there's a 91.4% probability of unchanged interest rates at the next Federal Open Market Committee meeting on January 29, 2025, with an 8.6% chance of a 0.25 percentage point cut. Historically, periods of monetary easing have been favorable for Bitcoin, as investors seek alternative stores of value in the face of potential currency devaluation. Trade policies and tariffs are another critical factor to consider. The potential reintroduction of tariffs under a Trump administration could have far-reaching effects on global trade and inflation. These changes could affect inflation levels, which are expected to decrease from 5.9% in 2024 to 4.5% in 2025. However, if tariffs continue to be maintained, inflation could remain high, increasing consumer costs in the US. These economic shifts could drive more investors towards Bitcoin as a hedge against economic uncertainty and inflation. Geopolitical risks continue to loom large on the horizon. Ongoing conflicts in Ukraine and the Middle East, coupled with rising global public debt, present significant challenges to economic stability. These crises disrupt supply chains, drive up oil and many other commodity prices, thereby impacting the global economy. In times of geopolitical uncertainty, Bitcoin has often been viewed as a safe haven asset, potentially driving increased adoption and investment. However, it's worth noting that some investors see Bitcoin as a risky asset and may sell in times of instability. The regulatory landscape for cryptocurrencies is expected to undergo significant changes. The Trump administration has promised to make the US the crypto capital of the planet, signaling a potentially more favorable regulatory environment for Bitcoin and other cryptocurrencies. This shift could include the appointment of crypto-friendly officials to key regulatory positions, potentially easing restrictions and providing clearer guidelines for the industry. One specific regulatory change that could have a major impact is the potential easing of SAB 121, an SEC guideline that currently limits the ability of large financial institutions to provide custody services for crypto assets. The repeal of this guideline could open the door for increased institutional involvement in the crypto space. As Chris Ryan, head of liquid active strategies at Galaxy Asset Management, notes, SAB 121 could easily just be latched onto a bigger package, even the budget reconciliation package, where it really doesn't get negotiated or changed because it was already approved. Proposed legislation, such as the Financial Innovation and Technology for the 21st Century Act, or FIT21, aims to provide clearer classification of digital assets and update existing regulations to account for blockchain applications in the financial sector. Additionally, there are discussions about potentially eliminating capital gains taxes on US-issued cryptocurrencies, which could further stimulate investment and innovation in the sector. Institutional adoption of Bitcoin continues to grow, with the success of spot Bitcoin ETFs paving the way for broader investment options. In 2024, these ETFs attracted over $20 billion within months of their launch, showcasing the strong demand for Bitcoin exposure among institutional investors. By October 20th, 2024, crypto exchange-traded products, or ETPs, managed $100 billion globally, highlighting the rapid growth in this sector. Corporate treasury investments in Bitcoin are also on the rise. Companies like MicroStrategy have been accumulating substantial Bitcoin holdings, scooping up $1.5 billion worth of the currency between November 25th and December 2nd, 2024. There are indications that other major corporations, such as Microsoft, are considering adding Bitcoin to their balance sheets. This trend of corporate adoption could significantly increase demand for Bitcoin and potentially stabilize its price. Government holdings of Bitcoin are becoming increasingly significant. The US is considering a strategic Bitcoin reserve proposal, which could position Bitcoin as a digital gold-like asset. Senator Cynthia Lummis has outlined a plan to purchase not more than 200,000 bitcoins annually over 5 years. As of August 20th, 2024, approximately 2.2% of Bitcoin supply was held by governments worldwide, with the United States possessing 213,246 Bitcoin and China holding 190,000 Bitcoin. Smaller nations like Bhutan have also become significant actors, ranking 4th in government Bitcoin holdings. This growing governmental interest in Bitcoin represents a shift in financial and geostrategic planning. Technological advancements are set to expand Bitcoin's utility and accessibility. Bitcoin staking, a new development, allows Bitcoin holders to earn passive rewards while enhancing the security of proof-of-stake systems. This innovation could transform Bitcoin from merely a store of value and medium of exchange into an active asset that incentivizes participation in decentralized systems. Scalability solutions like Stacks and SBTC are poised to unlock significant potential in the Bitcoin ecosystem. These developments could potentially unlock $1 trillion in idle capital, pushing Bitcoin's total value locked from $5 billion to over $10 billion by 2025. Ethereum, Bitcoin's main competitor, is also seeing significant developments. Recent upgrades, such as proto-dank sharding, also known as EIP4844, are helping Ethereum regain momentum. This upgrade introduces a stepping stone towards sharding by enabling data availability sampling and adding a new transaction type designed to efficiently handle large volumes of temporary off-chain data. In 2025, Ethereum's revenue is expected to grow as Layer 2 solutions funnel activity back to its mainnet. The growth of decentralized finance on the Bitcoin network is another area to watch. Liquid staking developments are fueling increased DeFi activity, potentially leading to higher borrowing volumes and increased demand for Bitcoin. Stablecoins, particularly USDT and USDC, are playing a crucial role in facilitating this DeFi activity. As CryptoQuant CEO Ki-Young Ju observed, the surge in altcoin trading volume isn't driven by $BTC pairs, but by stablecoin and fiat pairs, reflecting real market growth rather than asset rotation. Stablecoin liquidity better explains the altcoin market. Bitcoin's influence is expected to extend beyond its own ecosystem, potentially disrupting various sectors of the global economy. The payments industry, for instance, could see significant changes. Bitcoin-based payment platforms offer the potential for near-instantaneous settlement at lower costs compared to traditional systems. This efficiency could put pressure on traditional payment intermediaries to adapt or risk obsolescence. Asset tokenization is another area where Bitcoin and blockchain technology could have a transformative impact. By improving the efficiency of securities issuance and settlement, tokenization could provide greater liquidity and accessibility for alternative assets. This could potentially democratize access to a wider range of investment opportunities. While tokenization has been focused on government securities, 2025 will likely see private credit take center stage. Platforms like Maple Finance are simplifying access to private credit, making it more transparent and cost-efficient. Collateral management is yet another sector that could be revolutionized by Bitcoin and blockchain technology. The enhanced accessibility and operational efficiency offered by these technologies could enable faster and more efficient collateral movement through smart contracts, particularly during times of market turmoil. In the words of Adam Garrettson, partner at multinational law firm Gowling WLG, "To be sure, I think that the greatest advances that will help the crypto and digital asset sector will be greater regulatory clarity and, with that, greater institutional and retail adoption." This sentiment encapsulates the potential for Bitcoin to shape the global economy by 2025.